Have you ever wondered why, despite spending thousands of hours studying charts, indicators, and price action, you still find yourself staring at a red balance at the end of the month? It's a painful reality, isn't it? The silence of your office, the glow of the monitors, the weight of your own expectations, it's enough to break anyone. You sit there, watching the candles flicker, wondering what secret combination of moving averages or Fibonacci retracements you missed. Maybe you think it's just one more YouTube video, one more paid mentorship, or one more tweak to your risk parameters. But deep down, the frustration is mounting. Today, we aren't talking about fancy strategies. We're talking about the raw, unfiltered truth of the market. Let's dive deep into the mind of a trader and peel back the layers of failure that keep you trapped. First, we have to address the elephant in the room, the harsh fact that the vast majority of traders will never reach consistent profitability. This isn't just a pessimistic observation, it is a statistical reality confirmed by every broker's annual disclosure statement. It's not because they aren't smart. Many traders are highly intelligent, successful professionals in their day jobs, doctors, engineers, and programmers. They fail because they don't understand that trading is a game of attrition. Most people enter this arena looking for a shortcut. They see the Instagram Lamborghinis, the curated lifestyles, the freedom of trading from a beach, and they think it's a sprint. They believe that with enough caffeine and enough screen time, they can manifest wealth. But the market isn't a race, it's a marathon through a minefield. You are competing against high-frequency algorithms, multi-billion-dollar hedge funds, and institutional traders who have been doing this for decades. These entities have more data, more capital, and more computing power than you could ever dream of. If you don't accept that you are likely in the 95% who will fail, you have no chance of joining the 5%. Consistency isn't about being right 100% of the time, it's about surviving long enough to learn the game. If you think you're going to get rich in 6 months, you've already lost. You must understand that the market is designed to take money from the impatient and transfer it to the patient. Always remember, consistency is the byproduct of brutal, repetitive discipline, not luck. Next, let's talk about entitlement. You think the market owes you something because you spent 3 months studying technical analysis? Because you lost money yesterday on a sure thing and you deserve a win today to make your balance whole. The market is completely indifferent to your existence. It doesn't care about your rent, your student loans, your debts, or your dreams of early retirement. It is a massive, uncaring, automated machine of global supply and demand. When you approach the charts with a sense of entitlement, you are setting yourself up for failure. You start forcing trades because you feel the market has to move in your direction, or because you feel you are due for a winner. It doesn't. You have to trade what you see, not what you want. When you stop expecting the market to pay you, you start waiting for the market to give you a genuine opportunity. The market owes you nothing, not a single pip or tick, and that is exactly why you must be the one to adapt. Entitlement leads to revenge trading, which is the fastest way to wipe out a portfolio. You must learn to treat the market like a force of nature. You don't get angry at a hurricane, you prepare for it, you respect it, and you get out of its way. Then there's the siren song of fast money. Nothing destroys a trader's mindset faster than a big, lucky win at the start of their journey. Imagine hitting a massive profit on a high-leverage trade during your first week. Your brain gets flooded with dopamine, and you start thinking you're a genius. You begin to believe that you've cracked the code. You start taking bigger risks, ignoring your stop loss because it always bounces back, and you stop respecting the process. This is exactly how accounts are blown. Fast money is the ultimate trap because it creates a false sense of reality. You start chasing the dopamine hit of the P&L instead of the discipline of the process. If you win fast, you lose fast. You need to focus on building a sustainable process, not a quick payday. Every legendary trader, from Jesse Livermore to Paul Tudor Jones, has stories of early, unearned success that led to massive, painful drawdowns. They only achieved greatness once they realized that the goal was not to make a fortune in a day, but to execute a profitable strategy with absolute consistency over the course of decades. Many of you think the solution to your losing streak is a better strategy. You spend hours scouring the internet, looking for the perfect indicator, the secret algorithm, or the holy grail of trading systems. You jump from trend following to mean reversion, from Elliott wave to order flow, chasing the promise of a 90% win rate. But here is the brutal truth: a strategy is just a tool. If a carpenter doesn't know how to use a hammer, it doesn't matter how expensive the hammer is. You can have the best strategy in the world, but if your emotions are in the driver's seat, you will fail. Fear, greed, and hope will override any technical setup. You don't need a better strategy, you need a better version of yourself. Your strategy is only as good as your ability to execute it without hesitation or fear. Most traders fail not because their entries are bad, but because they exit too early when they are winning and hold on too long when they are losing. That is a psychological failure, not a technical one. Let's address the elephant in the room, the crushing loneliness of this career. Trading is perhaps one of the most isolating professions on earth. You sit alone in your home office, you win alone, and you lose alone. There is no boss to give you constructive feedback, no team to support you when you're having a bad quarter, and no colleagues to vent to over lunch. This isolation feeds your inner demons. When you lose, you have no one to talk to but your own self-criticism. That silence can be deafening. You need to build a support system, or at least a way to process your emotions outside of the screen. The solitude of the trader is a test of character that most people cannot pass. You must learn to be your own best friend and your own strictest mentor. If you cannot maintain your mental health while sitting in front of a screen for 8 hours a day, you will eventually burn out. It is essential to have hobbies, physical exercise, and social connections that have absolutely nothing to do with market volatility. Now, think about the prop firm world. It sounds like a dream, right? Getting funded, trading someone else's money, and keeping a massive cut of the profits. But the psychology here is even more brutal. You are now under the pressure of rules. You have a maximum daily drawdown limit. You have a trailing stop loss. You have a profit target. This isn't just about trading anymore, it's about performance under extreme pressure. Many traders who were profitable on their own small personal accounts fail when they go to a prop firm because the rules trigger their fear of losing. You start trading out of fear, and that is the end of the road. You must treat a prop firm account with the same detachment as a demo account, which is easier said than done when you know that one bad day could cost you your funding. The psychological burden of a prop firm is the ultimate filter for professional traders. It forces you to prove that you can manage risk under the weight of external expectations. Then we have the gurus. They are everywhere, selling you the dream. They show you their profits, their luxury cars, and their secret systems on social media. But ask yourself, why are they selling you a course instead of just trading? The industry is filled with people who profit from your insecurity. They thrive because you want to believe there is a shortcut. The moment you realize that there is no shortcut, you stop being a customer for the gurus and start becoming a student of the market. Stop following people who promise you the moon. Follow the principles of risk management and discipline. The guru is a distraction from your own growth. They want you to believe that if you just pay them, the market will become easy. But the market is never easy. It is a brutal test of who you are as a person. When you stop looking for external salvation, you begin to look inward, and that is where the real trading journey begins. We talked about setups. You are obsessed with them. You think if you just find the right pattern, you will be profitable. But setups are everywhere. The market is just price moving up and down, driven by human emotion and institutional flow. A setup is just a high probability moment, not a guarantee. You are obsessed with the what instead of the why. Why are you taking this trade? Is it because the setup is valid, or because you are bored and need the rush of a trade? Overtrading is the most common symptom of this obsession. You feel like you need to be in the market to be a trader. But sometimes, the best trade is the one you don't take. Discipline is often just the ability to sit on your hands and wait for the perfect moment. Real professionals might wait hours, or even days, for the right conditions. They are not afraid of missing out, they are afraid of losing money on a low-quality trade. Consider the emotional cost. Day trading is a high-frequency emotional rollercoaster. You are constantly dealing with the highs of winning and the lows of losing. It's exhausting. Over time, this takes a toll on your relationships, your health, and your mental clarity. If you aren't managing your stress, you aren't managing your trading. You need a life outside of the charts. You need exercise, sleep, and a reason to exist that isn't tied to your daily P&L. If your self-worth is tied to your trading account, you will never be free. The emotional cost is the price of admission, but you have to know when to step away. If you find yourself shaking at your desk, or if you find yourself unable to sleep because of a position you're holding, you have already lost. True professional traders sleep like babies because they have defined their risk before they ever click the buy button. Finally, let's talk about the ego. The ego is the trader's greatest enemy. When you are winning, your ego tells you that you are invincible. You take bigger risks, you stop following your rules, and you give it all back in a single afternoon of overconfidence. When you are losing, your ego refuses to admit you're wrong. You hold on to a losing trade, hoping it will turn around, just so you can be right. You are trading to satisfy your ego, not to make money. You must kill your ego to survive in the market. You must be humble enough to admit when you are wrong and disciplined enough to walk away. The market doesn't care about your ego, it only cares about your risk management. You must learn to detach your identity from your results. If you can't be objective about your own failures, you will never fix them. You have to look at your trading journal with the cold, hard eyes of a scientist. If a trade failed, don't blame the market, look at your execution. Did you follow the plan? If you did, then the loss is just a cost of doing business. If you didn't, then you have a discipline problem. Master your psychology or the market will master you. It is that simple, and it is that difficult. You are the only thing standing in your way. Take responsibility, accept the reality of the market, and start trading like a professional.